Welcome to TradeTheMBI.com. This is John. This report is for the 25th. And not surprising, we talked about the attempt to try and push back up towards that 23% from the other day. And they made a run at it. Wasn't entirely successful because we can see that shorts activated pretty strong from an MBI reading and clearly have white MBI lead and still magenta under yellow in that. So the fact that they were even able to make that much of a bounce within the weakness was pretty decent, but checkout still negative, but maybe slightly improved. So we're probably going to get more of this bounce right around in this range, but it's still going to continue to be weak. The Nasdaq obviously becomes more important because that's been the leader in all things, and magenta MBI over the yellow, meaning there was enough pushback in through there to try and lift things, but wasn't able to hold the 23%. And that failure obviously is having a minor effect at this particular stage. And still, there's quite a range coming back down to that 14,300 from where we are. Still about 300 points plus that would have to come off to get a complete fill. From our standpoint, an 80% move on that would bring us somewhere into that 14.4 range. Not too far off where the low was. It was pretty close to technical fill, but not an actual one. Obviously, treasuries were bought up on as the weakness started, and reducing the yield. Again, the yield is still way higher than where the Fed is, so the market's projecting a little. You might want to call it a force majeure against the market, which means the Fed is a little out of control in this one. They don't have the ability to affect that at this particular stage. And that's an interesting one because the market is sort of taken over as to what it thinks yields actually should be. It's a sign of strength from the market. And, the Fed being behind the curve on that one, not surprising in my view. They're trying to take it a little slower and be softer because they went aggressive early on and they know they need to back off because that's got to get absorbed in time, and it takes 6 or more months for the early rate increases to really start to have their impact. And now all of those rate impacts will start to really have more significance as we end towards the end of the year. Oil fading back a little bit, that it eases things. It still isn't all that great for them at this particular stage. The fact that we haven't seen a escalation from the conflict in the Middle East, and that has certainly been a relief for a lot of people. From a euro standpoint, though, we saw the bizarre spike. It was a short cover force, but of course it wasn't sustainable and it faded right back. We knew it wasn't, and that's just what you get when that kind of interaction takes place. And once you've lost the buyers from that setup, it fades off pretty quickly. From a gold standpoint, held up despite the softness that's showing right in there, and nothing abnormal about that. We still have some positive extremes that need to get filled back in place, but with the momentum of where things were at, not surprising. And actually, Bitcoin held up quite nicely within the overall move, making new highs, retreating just a fraction of it right now, and did far better than ETH. ETH reached its 100%, but wasn't even able to maintain over the 76. But again, this has been that safety play and long expected. From a 50K standpoint, we saw the MBI white spike. So when you're above that 76% and get that, the expectations move to the 50%. See if they're able to maintain it. We still had the white MBI lead at the 50%, but MBI magenta crossed over. That was enough to give it support, and that's where we saw a little short cover rally. But of course, it's faded back again after the last MBI white spike, and we're right back to pretty close to the same spot we were in once that MBI white poked up. From a 5K standpoint, we can see that we ended up with some just chaotic early intraday action right as the market opened. We got a little bit of a spike peak, but that faded off, and once it faded off, it started to create new lows from there. And then the build came, and we ended up with a pretty strong MBI white right around this 57 level. And obviously, the divergence to the upside was pretty decent, but you know that level's got to get retraced. and it didn't take long for it. They just waited till post market to do it and went back below it. So filled it in all nicely and right within expectations. And again, that's just a perfect indication that when you still get a signal, sometimes it just takes a little bit of time. And from a algorithm standpoint, time is less relevant than the actual point number that they have to achieve. So you get those kind of discrepancies. Is not that big a surprise, but good to point out because sometimes it can take a little bit of while. And that in this case had that nice divergence, which once that sell came in, you had a pretty good target to the downside on it. So it was fairly clean. As always, though, I think the market's pretty much behaving kind of as we expect given the situation worldwide as it is. And we'll continue to follow it. Any relevant updates, I'll certainly put them up there for you. As always, though, trade well. Look for me on the Skype chat. Have a good one.